you're an expert in what's going on, but this is not, this is a sort of feels like uncharted territory a little bit, right?
It feels uncharted because of the speed at which it's happening, right? And the fact that this virus is creating so much kind of angst and nervousness, not only in the markets, but certainly in the population, right? Whether it's in the U.S. or around the world.
Right.
So that's kind of what's a little bit unnerving. And I think for a lot of investors, to see the market have 1,000-point moves, really almost every day for the last 2 weeks, whether it's 1,000 up, 1,000 down, is kind of unsettling for people.
And they got very used to sort of a quiet, climbing up
complacent market.
Right, complacent market.
Right.
You never short a dull market, right? It just was climbing higher, melting up.
Right.
So the economic numbers are still pretty great.
Today's number was spectacular. The non-farm payrolls number was 270. It was 100,000 more than what the expectation was. And Wednesday's ADP number was better than expected. And so the macro data in the U.S. continues to be robust.
Right.
Now, that may change next month in April as effects of the coronavirus. But underneath it, the macro data is good.
So today is a Friday.
Yes.
How many people buy up stocks on Fridays?
Well, not a lot, especially these last couple of Fridays, because everything that's going on and the nervousness going into the weekend that something new is going to happen.
That's why I got surprised last Friday, because right near the end of the day, they did do a little buying.
They did a little buying because it felt like, I think on last Friday, it was interesting, was the market had become so oversold that a lot of, you could feel it, that people were making the bet. But then look what happened on Monday morning, right? And so I think people have that in their head again. And so I think today's going to be a little bit different. I think it's just going to kind of fade into the afternoon.
You know, I was following everything that's been going on. And one thing that's different is the computers, right? And the stop levels that people have. And so when we're moving higher, the computers don't kick in and do anything because then nobody says, hey, I want to get out, when I'm making hundreds and thousands of dollars.
No, but the computers kick in and take it up, right? Because
but it's more so and more prominent on the downside, right?
It feels that way on the downside because it feels it's uglier on the downside because people are losing money. But the algos and the automation that takes place on both sides, except when the market's going up, everyone pats themselves on the back and says, look like it did a great job.
But we didn't have 1,000-point days.
No, we never had 1,000-point days. This virus
feels like it's hitting these levels, these stop levels, and the algos are kicking in and they're taking us lower.
And that's exactly what happens. And it breaks trend line supports and it causes additional selling.
Do we get and retest the lowest levels of last Friday?
Yes, I'm not sure we're going to do it today, but I think because it needs to be retested. It came down there with such viciousness.
But we did not retest the Grinch that stole Christmas in December of 2018.
No.
So why do we have to retest Friday's low?
Because what happened in December 18 was very different than what's happening now, right? It was really a Fed economic thing in December of 2018. And once the Fed came back and kind of retraced their steps, you saw the market immediately rally. What's happening this time is there's still this nervousness and angst building up around this virus, which only makes it different no matter what the Fed does.
People want to put money to work, Kenny. What should they do? So
here's what I think you should do. As the long-term investor, these are great opportunities. As ugly and as difficult as it feels right now, opportunities like this don't come around very often when you see the market selling off 12 and 13% in individual names that are off 15 and even 20%. And so you got money on the side. If you're a long-term investor, look at your portfolio. Look at the names you've already had in there that you bought for very specific reasons. And if the story hasn't changed in those stocks and those prices are dislocated, that is really a gift in the long term. Doesn't mean you go all in on day one. Keep feeding it in because listen, chances are the market might get weaker. So just keep your ammunition. Don't spend all your money in one fell swoop.
Okay, so do you have certain sectors that you like? I know you probably can't pick specific stocks. I mean, everybody's getting back into Apple and Microsoft.
Right, correct.
I mean,
and they're going to get it
spade a spade. Everybody's getting in and buying some Apple and Microsoft.
Right, but I think, listen, consumer staple names are going to be good performance because no matter what happens, you still need the staples in your life.
So that's like Procter & Gamble.
Procter & Gamble, right. Very kind of core Americana names, right? Those are utilities are going to play a great role because not only do they have, great yield, they're kind of boring stocks. They're not the high growth names that are going to, like FANG stocks that are going to go up and down with such viciousness, right? So utility stock, and we've seen that. We've seen utility stocks rally into this, even as the market, everything's under pressure, but those are under less pressure, right?
What's your takeaway? I mean, you send me so many notes. I was going through them and putting in my head. I mean, what am I missing? Am I missing something?
No, I don't think you're missing anything at all. I think what's happening is that the market and investors and really the algorithms are becoming caught up in the headlines. And look, today was a perfect example. The New York Times came out and said, coronavirus, the end result is death. Well, that's not very helpful.
Right.
It's not helpful to anybody. It's not helpful to the average American. It's not helpful to the algos that read the headlines and see negative headlines like that.
Listen, I don't like to get involved or give my opinions. Now, our last guest said that the Fed was just bowing to the White House. I think the Fed sometimes has to cut to support the economy. What do you think is happening, and what about these lower rates?
So I think the Fed not only bowed to the White House, I think the Fed is also bowing to the market. I think the Fed feels the pressure from the market. The market is demanding. You know how it goes.
Okay, what do you think of the 10-year below at 66 basis points?
Everyone's like rubbing their eyes. They can't even believe what they're seeing.
Is that bad?
Yeah, well, I don't think. Listen, the fact that the yield is going down is just as a reflection of all this money going into U.S. Treasuries. No, it's not bad saying, okay, a recession is coming. I don't think a recession is coming. But the fact that yields have plunged.
Say it louder.
I don't think a recession is coming. But the fact that yields have plunged is a direct result of the surge into U.S. Treasuries for that feeling of safety. People that are afraid of the markets need to put their money somewhere. So where do they put it? They put it in U.S. government paper. That's a positive.
Right.
But the fact is, as prices go up, the yield comes down, right? Now, and so the fact is now that Jeffrey Gundlach came out yesterday and said that he fully expects the Fed is going to make another rate cut in 2 weeks, another 50 basis points. That's 1 full percent in 2 weeks when rates were only 1.5% to begin with. In my opinion, they should never. I think it felt like a panic-driven cut last week, and it feels like it's going to be another one if they do it.